How is everyone doing today? Are you guys okay? How is trading going? Good morning, Remo. Okay, we are getting ready to start, of course. Let me share my screen with you guys so we can get onto it. Okay. Good morning. People are joining us from the YouTube live. That's awesome. So, just before we start, just the disclosure, just to make sure that this webinar is for educational purposes only, okay? For those, because it's the first day that you guys see me on the morning's briefings. For those who didn't see me yesterday, allow me to introduce myself one more time. My name is Theo. I'm a Greek Cypriot. All my trading experience and career started in Australia 10 years ago, where I used to live permanently. Now I relocated back to Europe, back to Cyprus. So I've been trading and I'm still trading. I'm an active trader. I used to start with prop firms and prop account tradings. Back then, it's been 10 years now. And now I'm here with you guys, trying to give you all my knowledge, trying to show you the way I trade, how do I handle my entries, my exit, my risk management. We're going to go through the whole charts to do chart analysis. Any questions you may have, please feel free and just type them on the chat box. If you want to go through some pairs at the end, or if you have some general questions about trading, about risk management, about some strategies I use, or if you are trying something in your trading and you think that you need someone expert to help you, please feel free to just express yourself the way it's best for you. Okay, the purpose here is to make sure that you learn how to analyze the market, you learn some strategies, some techniques, you get the experience that maybe you don't already have it, so you can add something into your trading, which is going to help you move faster to your trading goals. Okay, so just to start, guys, please, I would like to make sure that you can all see my screen. I'm going to just draw something random here. Kindly please type yes if you can see what I'm writing. Okay, what about the people on the live chat, YouTube live chat? Can you please? Okay, so everyone can see the drawings. The reason I'm asking you if you can confirm the drawings, it's because I will draw all the time and I just need to make sure that you can see what I'm pointing on the charts. Thanks everyone for confirming. So just to make sure, and as you already know so far, this webinar is for training and education purposes only, okay? It's not any financial advisor. For financial advisors, please seek the person in that field. I'm not going to tell you get on the trade, exit the trade. No, I'm just showing you what I do based on my beliefs, my interpretation of how I see the market, and everyone has the freedom to make their own choices. Okay, so let's start with today's high impact news. All right, I just put them here so it's going to be much easier for you guys to see the high impact news for today. Already in Australia, we had the gross domestic product. The expectation was 0.7% increase, but it came surprisingly with 0.8% increase, which if the market will follow through, it's going to give a boost to the Australian dollar. Okay, so if this news is good enough to change any market trend or to start a trend, it has a high probability to give a boost to the Aussie dollar. Now, the way I like to play my trades is I try always to find a strong currency and a weak currency and take that pair and increase my probabilities of a good trade. Now, today we're going to have the German retail sales. As we know, it affects the euro. The previous, it was minus 2.7%. The expectation, it's on 4%. Now, if the actual will meet the expectation, we expect to see a strengthening in euro. What does this mean? It means that the euro can rise and it's going to create a fall into another currency. Now, what's the trick situation here and why I would like to put it as a very, very first on the webinar? If you guys see, if the expectation, it's going to be a rising in the number of the retail sales here. So we're going to see a green outcome. It means that the euro, most likely, it's going to be very strong for the day or for the time period. The Australian dollar, we saw that it's a strong currency from this, at least for today, based on this news event. If you're going to go to the chart, which we're going to go in a while, to Euro Aussie, Euro AUD, the euro, based on what we just said, the euro will be strong, for example. The Australian dollar is strong. You're trying to see now which one it's going to rally against the other. It's not a play I would like to do. It's not the way I trade, because two strong currencies, most likely they're going to just drift the one next to the other. For example, if the New Zealand dollar is a weak currency across the board, yes, I can use this information and I can take Australian New Zealand dollar to the upside if there is an uptrend there. I can take advantage of this news event. That's how I played it, taking advantage of the outcome of the news event, finding an opposite related currency, and just if I have a signal there, I prefer to trade it because for two reasons. First, high probability trade, and second, if it's going to start running, it means it's going to give a good run. Okay. Did I confuse you, or what I just described, it makes sense to you? All clear, all clear. Okay, so let's move on. We're going to have the Christine Lagarde talking today on behalf of the European Central Bank. We're going to see the outcome, if it's going to be bullish or bearish for the euro. Then later on, we're going to have the manufacturing purchase manufacturer index. The expectation is to see a decline on the ISM manufacturing index today. So how can we use this outcome? If the expectation it's going to confirm the forecast, it means we're going to see a decline on this news event. So maybe the USD is going to get weakened if they're going to have too much of distance, the two numbers. So if we're going to have a weak USD, and for now we know that we have a strong Australian dollar, so maybe this is going to be a good pair for the day. So just keep an eye on that. If you are trading, especially if you are trading intraday low time frames, that will be a good pair to see if the outcome it's going to confirm the forecast. Okay, and if the market will follow through. Now we're going to have today later as well the Bank of Canada. They have the interest rate decision. They are about to increase from 1% to 1.5%. Now, if this is going to happen, we're going to see, of course, a bullishness and a rally to the Canadian dollar. Now, you can find a weak currency and you can take a good trades out of that. Okay, so let's go to the charts. For those who used to watch Marcus' webinar, you're going to see a little bit different way of showing my charts. I prefer to use this type of background, the white. Usually I have this on the height. I prefer to use the same color with Marcus, the white and the blue, in terms of showing the white candles are the bullish candles, the blue candles are the bearish candles, so it's easier for me to visualize it. Okay, you can use any type of chart, or if you want to use bar charts, you can use bar charts or line charts, whatever. I just use candles because I trade a lot of candle patterns, okay, which you're gonna see it over and over and over again. You're gonna become familiar with. If you're gonna see that they can add value to your trading, just feel free to use however you want. And that's what I teach as well to the to my webinars that I'm doing a couple of times a month. Now, I like to start from the daily charts and the weekly charts. Usually I flip to the weekly charts to see some levels of support, some levels of horizontals, resistance, to structure the market a little bit. So I can see here that that's the pound USD, the weekly chart. I can see on the weekly that here we had a bit of sideways, so it's a bit of movement here. So a level of an area of interest here, because now we are in a downtrend. So we can say that this is a support who has been broken. Now it's going to act as resistance. So we have this impulse move down. Now we are in a correction mode. This is a correction move of an overall downtrend, on a weekly downtrend. So if we're going to flip to the daily chart, we're going to see this as a daily potential higher highs, higher low daily trend. But for me, it's a counter trend on the weekly chart, on the higher time frame. So this is a horizontal resistance on the daily chart. On the intraday, for those who are trading 4 hours, 1 hour, 15-minute chart, this is a strong level, okay, because we see a big movement from the daily, but for me, doesn't consider as strong as it has to be for me to take a trade to the short side. How do I see this one? I just see that the market was pushing higher. Here we have this inside candle, so a bit of sideways move. The market was in an indecision phase. Then yesterday we had this bearish candle close below here, but it falls break the last 2 days candle, which for the candlestick traders, we call this as a mother body, as a mother candle. All right, so we had a false break with this tail. Now this shows a bit of decline on the pound USD. Of course, we're going to have a clear image here after the news event later in the afternoon from the PMI manufacturer on the US. Okay. Hi, Sigolizlato. Hey, Theo, can you see your account balance and running equity? We can see your account. Yeah, that's an account I use. That's an account I use to trade, of course. I'm on 2 trades, New Zealand USD. I took that trade yesterday, I think. So yeah, on the 31st. And a couple of weeks ago, I took the USD yen. I'm going to show you the trades, guys. It's nothing to hide. So for this one here, I'm just on the sidelines. I don't do anything. I just see that US dollar, it was a bit strong yesterday. Okay. Now, Euro USD, similar scenario. If we go on the weekly chart, we can see here that there is a downtrend. We are still on the downtrend. For me, it's a valid downtrend. Here we have a point of reference. If you can draw a horizontal line at this lower low point here, up. So now we are hovering around this area of resistance. So for me to go short, I need to have a bearish engulfing candle, which I'm going to show you. Guys, I cannot teach you and show you everything I know in just 30 minutes. Okay, day by day, you're gonna find out so many things about candlesticks and the way I trade, which I'm sure you're gonna find an incredible amount of value to your trading. All right, so this one here, I'm waiting for a double top, a rejection to go short. That's how I plan to play this trade. Okay, the reason I don't want to jump on this bearish engulfing candle, it's because the market here, it put a higher high. Higher high, it means break of the structure. So buyers are in control. Again, because I watch the weekly charts, to me, this is still a bearish trend. So I'm waiting until the market, it's gonna do a double top, or maybe it's gonna just sell off, who knows, or it's gonna break higher. No problem at all. I'm gonna just get ready to see this upturn as a new trend in the market. Okay, let's go to the Australian US dollar. This one, it's very, very mixed for me, because we have this structure here, lower low, lower high here. Now the market, we had a trend line, a nice trend line here. Many of the people I know, including myself, we tried to find entries here, okay, which it was a very nice trade. Now we are on this impulse move, still below the lower, because of the bullishness of the Australian dollar today on the news. I'm a bit skeptical, to be honest, to jump on the short side from here. So I prefer to have a bit of more clearance later on with the PMI news announcement. Then let's change this one. Let's go to the trade I'm already in. I took this trade, this is the USD Japanese yen. I opened this trade a couple of weeks. I think it was a week before. The reason I opened this trade is because we have this nice impulse move to the upside on the weekly chart. And then we put this inside weekly. It means the daily, it was drifting sideways. And then we see a false break of this high, which signal a double top on the daily chart. I will show you later. And then it put a nice bearish engulfing candle, which is my favorite candlestick pattern, which I trade. And I never hesitate to take this type of trades. Okay, although that was a weekly, I didn't take immediately this trade. Okay, I was waiting for a lower low, lower high confirmation on the daily, which it was this one here. And then I opened the trade here. I put my stop somewhere here. It's a tight stop. It's not usually I should put the stop here, but for this trade, I was a bit aggressive. because of the weekly chart. Okay, again, I manage my risk all the time to be, I'm very strict with my risk management. So if this is going to be a losing trade, let it be. It's part of the game. Okay, I follow my rules, and that's all matters. So we have this lower low in the market, this lower high as well. So for me, it's still a valid trade. We have, if you go to the 4-hour, 1-hour chart, you're going to see here at this area, it was a bit of resistance. So we expect the sellers to defend this resistance as well. Again, if we're going to have bullish news from the US side, then of course, most likely we're going to see a break above. But if we're going to have bearishness, maybe it will help to shift that to the downside. Okay, I expect a bit of a correction to this market, to be honest, because it's been so many. It's been since beginning of March until beginning of May without a major correction. Okay, so I'm expecting a bit of pullback to this one. That's why I just positioned myself. Then we have the New Zealand. I opened this trade yesterday, and the reason is weekly chart. I have here a level of I have here a level of support which is broken. Now it's going to act as resistance. Weekly is in a weekly, it make lower low, so a pullback here back to previous support, which now it's going to act as resistance. I went down to I use time frame correlation, so I went down to the daily chart. I found my favorite pattern here, which is the bearish engulfing. Bearish engulfing shows a massive shift in the momentum in the market. So I just opened the trade here. My stop, it's there. It's moving down. Here it's about 50% Fibonacci level, and I just put to take my profit down there. It's a 2-to-1. So if this is going to win, it's going to cover any other losses, future losses, or if the USDN, for example, it's going to end up being a losing trade. And if this is going to be a winning trade, it's going to cover the loss from there. That's why I'm going to tell you in another sessions as well. I'm going to tell you a little bit slowly. I will reveal risk management rules which I have and risk management ways that I play in the market, because I believe that it's one of the most important components of trading profitability. The only thing we can manage as traders, guys, is how much money we can lose at any trade. Okay, we cannot know how much volatility is going to come into the market and how much money we're going to make if the trade goes on our favor, but we know for sure how much money we're going to lose because we can decide it before we enter into any trade. Okay. Now, pound Japanese yen, this is the weekly chart. The reason I left that to show you because it's like a textbook example, and we had a good trades from here. So we had this resistance, this resistance, this resistance. The market was pushing higher, and finally it break above. The price fall down, and we were trying to find this also around 50 to 61 Fibonacci retracement. So on the daily and 4 hours or 12-hour chart, whatever you prefer to use, on the daily chart, I was trying to find an entry here. Okay, the daily didn't come, but I think it was the 8-hour who came. Yep, I found the entry here. You take a trade here, you go there, you make a 2-to-1, 3-to-1, whatever, it's going to be your risk-reward ratio. Okay, so that was a very good example. I will analyze this a bit more in another session, okay, because it's a very good trend break following with a nice, following with a major trend continuation. So, and it's something that we can see all the time, all the time. The market make a correction, it make a lower low. People, they think that they're gonna this is going to keep doing lower lows, but if they're going to go to higher time frames, they're going to see that this is just a correction of the weekly chart and it's not a downtrend of the daily chart. Okay, so we can draw a trend line here, nice trend line, not the way I draw it, the way we can draw it with the lines of the MT5. So you have your trend line, 1 touch, 2 touch, 3, 4, 5 touches, very valid trend line. So we see a nice broken close. We wait for a pullback, go to the lower time frames, find a nice pin bar or bullish engulfing or double bottom, whatever you are using, and then have a relative small stop. Okay, tidy stop. So it's going to allow you for 2 to 1, 3 to 1 trades if this is going to work. Similar to Euro Yen and Aussie Yen, they have very too much of similarity. Now the Euro Australian, you see guys, this one here, I'm on the daily chart. Both of them, they show a kind of strength, both of Australian dollar and Euro. They are a bit strong in the market now. So this pair, it's just drifting sideways. So if someone was entering here for the continuation of this uptrend, if you ignore to understand how the currencies are moving, and that's I'm going to teach you, and I will go extensively in the next sessions, okay, and we're going to progress as time goes. So if you're not going to understand and you're going to just go and see Euro Aussie and I'm going to just find a good trend here and I will take the trend because it's a trend, and you ignore how they move the one with the other, okay, then you're going to find yourself, if you haven't already found yourself in many trades, when you enter the market, it's just drifting around, you pay the swaps and you don't have an outcome on the trade. Okay, so if you recall what we said before, Australian dollar and Euro, they are both relatively strong at this time being. So any trade here, it's going to just drift you sideways unless we have the one pair outcome and perform the other one. Okay. So pound Aussie, similar scenario here. We are in between this range. Usually I love trading ranges. This pin bar here, enter here, stop here, take 1 to 1 up to there. It's a no-brainer. Okay. Then because both pound and both Australian dollar, if you see pound USD and you see Aussie USD, you will understand what I'm talking about. They have similar strength and weakness, I would say, in the market. So these two, the one against each other, it's just drifting sideways. Okay, within the range, I don't take any trades. I take trades only at the very top to go short or at the very bottom to go long if I have the appropriate price action, which is going to show the shift in momentum. But within the trade, within the range, everything is super random. Everything is low probability, so I just stay away from this type of markets. Okay, I repeat, I trade exclusively from the edges of the range, but I don't go to find, yes, maybe this is going to push lower, okay, and it's going to come doing like this, and it's going to push lower, but we don't know if this is going to happen, and it's not our job to say if this is going to happen. What's our job to do is to find high probability trades. And then the market do itself. The gold, it's on a downtrend, as we can see from the weekly chart. Okay, here we have a bit of support here, not a bit of support, it's a strong support. We don't know if buyers, they are here to stay and to push the price higher. We really don't know that. If the buyers were so strong here, why after this bullish, big bullish candle. The buyers didn't follow through, and now we see a bit of lower low here. If they were very strong, then the market should see a direct push to the upside, like we've seen here. Let me show you here. You see buyers, they step in, they make this big buying pressure, this again strong buying pressure, and they keep the trend. We don't see the same scenario repeat itself. So I will say that the market has still room to move, at least to retest some areas lower, at least to retest somewhere about here, which we had a bit of reaction recently. And maybe, who knows, maybe it's going to just come here like this, and then it's going to push higher. Okay, we're gonna see. We don't know what's going to happen. Okay, guys, so I will just read the questions here. Danny is asking, sorry, do you also make a video from this session, and where can we find it? It's going to be on YouTube, Danny, and everyone. This is recorded on, and it's going to be it's recorded, and we're going to upload it on YouTube. Okay, so you can go back and watch it again. But guys, if you want to stick around for the upcoming sessions and the upcoming weeks and so forth, I'm going to take everything and I will bend it together, so it's going to make very nice, smooth and progress for you. Okay. So, hi Theo, can we see your account? Yes, we read that question. Oh. Sorry, just give me a sec. Anka, could you please let me know on what time frame do you take the decision to enter the market? Okay, guys, Anka is asking, could you please let me know on what time frame do you make the decision to enter the market? As I said, I use the weekly chart to find strong levels of support. Let's go to, okay, let's say to the gold market. So this is the weekly chart, Anka. I use this to structure the market. So what I mean to structure the market, to see where I have support, resistance. For example, here, definitely we have a resistance area. Okay, now, if the market is going to move higher, as an example, if the market is going to move higher in an uptrend, when the market is going to come here, I will definitely manage my risk on the trade. Most likely, I'm not going to be in the market. I'm not here to pay the breakouts. Okay, I'm not a breakout trader. I'm just here to make sure that within the range, I will go to find opportunities to enter the market on the daily chart, sometimes on the 8-hour or 12, depends on how I'm going to be on the computer, but mostly, let's just put it back. So, but mostly on the daily and 4-hour chart, I will drill down to find entries from these strong areas of action on the weekly, and if I see a daily strong daily resistance like this one here. Okay, another example. We have this pin bar. The market put a higher high here, and then immediately it broke below. Okay, now we are on the daily chart. Can everyone see this? Daily chart, we put a lower low. Then we have this pin bar here. Now, it's not any reason to go to a lower time frame to take this trade, to go to the 4-hour chart, for example, and it's somewhere here. It's somewhere here to go to the 4-hour chart. It's not a reason to go and look here because we have a nice clean setup, a pin bar here. All right. I'm sure you can see it, right? You can see this pin bar here. So if I enter here on the close, I put my stop here, my entries here. and I see that the market has a strong support here, I can be patient and leave my trade to come all the way here, which it came. All right. So I wasn't that aggressive on this trade. I just closed the position right here. I didn't let it until the edge. Okay, it's fine. We don't need to just take the last pip of the market. As long as I make 2-1, or if I see a room for 3-1, I don't hesitate. I just enter the trade. Now, when I saw this rejection again, the market came, another pin bar here. It didn't hit my stop. And then another pin bar here. I entered here again. I went for a break even here. I entered here on the close. A new stop here. Let the market. It was another 2-1 trade here. So it was 3-1 from this and 2-1 from this. So it was a kind of 5-1 trade. All right. So it's going to be either on daily, it's going to be either on 4 hour, where in whichever time frame I will find my catalyst, I will just go for it. Okay. Always 1 to 2 time frames below the one. Yes, exactly, Williams. Always 1 or 2 time frames below the one you are following. Absolutely right. Okay, guys, sorry I took it 5 minutes more from your valuable time. It was my just very first session. I hope that everyone understands. I hope that you find some value from this session. We would love to see you sticking around and learn new things in the market, which I'm sure they're going to highly impact you. And you can ask your questions, whatever you want, share your ideas, your thoughts. Okay, just make sure you follow us on Instagram, on Instagram, on Facebook, on all the social medias, on YouTube, of course. You get all the recordings. So that's it. I'll wrap for now. Have a great day. Have a great trading day. Wish you good luck with your trading. And I will see you on Friday to the next one. Okay, thank you so much for your participation. Bye to everyone.